and welcome to the Trading Bell. Now, this is a conversation we've been waiting to have because a company that we've been eyeing is now moving and is at profitability. And we're talking about KQ. And guess who's in the house? The Group MD and CEO, Allan Kilavuka. Allan, welcome to the show.
Thank you very much.
It's good to see you.
See you too.
I must start by giving you the flowers because you've been on the Trading Bell several times. We've always been talking how you're going to recover, but for the first time we have seen greens, if I may call them that, in the market, recording a whole 513 billion. And I just wanted to ask you, what's your immediate feeling on these results, and what are some of the drivers that you have seen making this significant improvement?
Yes.
Yeah.
So thank you very much for inviting me.
Yeah.
First of all, is to clarify that it's half-year results.
Half-year results.
It's important to say that.
Yes.
Half-year results, and yes, indeed, it's true.
Yeah.
This is the first profit that we have recorded.
Yeah.
For the last 11 years. We've not been having losses.
Yeah.
So this is the first profit after 11 years of losses.
Yeah.
And you asked me about the feeling. Of course, the feeling is a feeling of relief and also gratitude for the hard work that the team has put in to get us to this point.
Yeah. Wow. And congratulations on that.
Thank you.
One of the key things would be, and I am glad you clarified, this is half year, then it means there's a full year results that we'll be looking forward to. And one of the key things would be, are we still going to see that sustainability coming forward and probably better numbers at the end of the year?
Yeah.
Yeah.
So, this is all under the umbrella of what we're calling Project Kifaru. Okay? So Project Kifaru started, let's say, in 2021, right after COVID. And what we have done is to lay out a strategy of how we will get out of where we were, which was losses and unsustainable growth, to where we are. So we started with what we call shrink to grow. So we rationalized our operations. We made sure that we were also optimizing the network. What does that mean? Look at the fleet, look at operations, look at your routes to see which ones are sustainable, which ones are profitable, which ones are contributing to the overall network. And then obviously have a keen eye on costs and bring those down.
Okay.
And then that way we had planned that by last year, 2023, would reach an operating profit, but because again we were not operationally profitable, which means that the company was not viable. So once we got to that point, that milestone, the next point was bottom line profitability, which we had told the market we will get to in 2024. So we're very happy that we've gotten to that point at half year. We obviously are trying hard to make sure that that is a sustainable result for the end of the year. Now there's a lot of hard work that goes behind that, because you have to make sure that you're hitting your budgets, your targets for revenue, and also making sure that you're containing your costs.
Okay. I plan to ask this question later on, but definitely one of the key headwinds that hit you was COVID. And it was not just you, it's across the globe. And it was quite a tough one when I looked at numbers even across the globe and how airlines were really hit hard. I wanted to ask you, now that COVID is behind us and now you can clearly see, and really kudos to you because there are so many other companies who are still reeling on those effects of COVID. How do you see it? Do you see like we have now shredded off the losses from that side? Yeah,
actually what is important to recognize is, Kenya has been in this situation for a much longer time than COVID. So we talk about 11 years.
Absolutely.
In our case.
Yeah, which is way back.
Which is way back. What COVID did is take a very bad situation and make it much, much worse, because we were completely grounded. Now, in aviation, many companies, a lot of the companies that are quoted on the stock exchange, you'd find that they're either labor intensive, capital intensive. Now, in aviation, we are both labor and capital intensive. So it's a double whammy. Which therefore means that, and also on top of that, it's very, very highly regulated. We operate in multiple jurisdictions. We have multiple currencies and so on and so forth. So the business is very complex. Okay. The product is very perishable. So once the aircraft takes off, that's it. Sale is gone. So what am I saying? I'm saying that to be sustainable
Yeah.
is hard work.
Yeah.
It has to be every year. You have to look at your cost. You have
Yeah.
to look at your sustainable growth.
Yeah.
The margins are very thin, so any small event that happens both internally and externally will impact your results.
Wow.
Yeah, so it's really being true to your targets,
Yeah.
being very meticulous, following up on all the milestones that you've set yourself to achieve.
Okay. All right. Coming back to the numbers, and I wanted to touch on your capacity in passenger growth, and your capacity measured by available seat kilometers, I think that's what you call it, grew by 16% and passenger numbers by 10% to 2.54 million. And I wanted to ask you what operational or market conditions facilitated this expansion, and also maybe you could touch on how you're addressing the challenge of managing this increased capacity.
Yeah, so there are two things. One is naturally there was growth coming out of COVID. So the year-on-year growth continues. So the market grew by about 12%.
Yeah.
Okay, so that was a natural growth that helped us to grow because people were coming back to flying after years of the lull in COVID. Secondly was our operations. I remember the whole process was look at the routes that are profitable, that are bringing you income, and then rationalize. So we removed some of the routes that were not contributing to the network, and we introduced others which we thought were going to be contributing to the network. Okay. So the impact of that, the in and out, and the impact of people coming back to flying, the natural growth in the economy, was what actually led to the 16% growth in capacity. Okay. But that, if you look at that, 16% of growth in capacity and 22% growth in revenue means that our revenue is quality revenue. In other words, we're growing faster than the capacity, which is what you want.
Yeah, which is good.
Yeah.
Anyway, it's a good headache to have. Talking about your operational costs and efficiency, I noticed there was an increase in it, and I wanted to know how are you managing this so that at least you're operating at optimum levels and efficiency.
So the operating cost grew by 22% in tandem with the revenue. Okay. Which is generally what you expect to see. But it means that we are not necessarily as productive as we should be. Okay. So the assets and people need to improve their productivity so that the increase in revenue is higher than the increase in your operating cost. Yeah. Because operating cost varies in tandem with your operating or with your revenue. Yeah. But it's good because it's not higher. Yeah. Okay. So it is at least even. Yeah. What now that means is that your assets and your people need to improve their productivity, which is what we're working on now. Yeah. Okay. How do you make sure that you're producing more? You're sweating your assets more. Yeah. And also your people are producing more with the current level of staff and the current level of resources that you have. Okay. So the initiatives that we've set out to achieve this year is to make sure that we're getting more from the assets and that our people are producing more. Okay. I want to bring in the conversations of profitability and yield because I noted from your numbers that you had an operating profit of 40% increase, which is quite commendable. However, there was a reduction of 9% in the yield, so definitely you have some pressure to manage there. So how are you managing these yield pressures, and what are the key initiatives to ensure just still the same sustainability on it? Yeah, so that is the play is between volume and yield. Okay, so volume being the number of passengers. Yeah. So as you saw, you say the capacity increased by 16%. Absolutely. Passengers increased a little bit more by about 20%, 18 and 20%. Yeah. So what you therefore need to do is continue growing the volume. Yeah. Because there's going to always be a yield pressure. But again, it's looking at the routes. There are some routes that will give you a higher yield, some will give you a lower yield. So the lower yield ones help you with the volume, and the high yield ones help you with balancing out volume and yield. So the idea is identify the risks, the routes that will continue to give you better yield, and also optimize on the ones that will continue giving you volume. Okay. So I can give you some examples. So if you look at our Mumbai route, Mumbai route is a very low yield route, but it is very high volume. So that's important for us because it keeps the volume going. Yeah. And also it contributes to the rest of the network. If you look at another route like London is a very high yielding route because of the quality of traffic. This is business traffic for the most part. So again, they balance out each other in that way. New York is another one. Particularly during the low season, it's very high yield. Although nowadays, I would say actually the volume is also quite high.
Okay. Great. I had a mouthful of asking this question, but I want just to put it to you in my simplest way, and it's about restructuring and investor expectations, because I know you're also in a position where you want to attract strategic investors for your long-term goals. Shed some color into that.
So this we are calling Project Kifaru 2.0. Why is that the case? The case is because you first of all you become operationally viable, okay, which is what happened in 2022. Then you get bottom line profitability, okay, so that you can demonstrate that in fact there's likely to be a return in this investment. Now, for long-term sustainability, because in aviation size is important. Okay, the bigger the size, the lower the unit cost of production, and therefore the more productivity. So we need to expand. Now that we've demonstrated viability, the expansion is important. And for you to expand, you need capital or debt. We don't want debt, we want capital. That is the motivation of looking for the strategic investor. We're also looking for the investor because we want synergies. What can they contribute from a synergistic point of view to our network? And therefore, you know, what other contributions can they make? You know, there are many areas where we need support. So, for example, how can we get someone who's compatible to our network, our airline network? Can we get those ones who can help us from improving our infrastructure, IT infrastructure, for instance, and so on and so on.
Okay. And really certainly wish you well on that. Let's talk about your sustainability and innovation. And I think behind the scenes I was asking you whether we were about to have another report, and you said yes, there is that. How is KQ marrying sustainability? And I know because your industry can be touted as one of the people who are eyed to ensure that they're living harmoniously with the environment and all that. And
I keep making this correction.
Yes.
Sustainability is not all about environment.
You're right.
Okay, environment is one part of it. Important part, but not just one part.
Absolutely.
Because if you look at, for example, in Africa, you know, for us as an airline, one of our biggest mission is how can we support alleviation of poverty in Africa? Okay. Airlines are known to spur economic growth. We also contribute a lot to employment, directly and indirectly. We help to generate a lot of trading. Okay, by export of goods and services, and also making sure that people are meeting to get to the markets where they're supposed to do business. So sustainability is also economic. Okay, and that's what we need to make sure that we help and contribute to economic sustainability. Not just for ourselves, but also for the whole populace. Indeed, it is true that environmental sustainability is important, and I know, you know, because people see aircraft flying up there and nearer the ozone, and we are said to be polluting the environment. But I don't know if it will surprise people to know that aviation is only known to contribute 2% of global emissions. Okay, much less than even ground transport. Much less than ground transport. And in Africa, we as African aviators, we contribute only 2% of global traffic, global air traffic. So Africa is 2% of 2%, which is 0.004%.
Absolutely, very low.
Of emissions. That does not mean that we are not going to contribute to, we're not going to play a part in reducing environmental emissions. But what we're saying is we need to contextualize it as well. So what are we doing? First, the type of aircraft that we fly, you know, we make sure we fly as newer aircraft as we possibly can, because the newer the aircraft, the less emissions. There's also a push from our industry to move towards sustainable aviation fuels.
Okay.
That's going to take time.
It's going to take time.
Because of availability of sustainable aviation fuels. And because of the cost of aviation fuels. So then we look at alternative ways of how to reduce emissions.
Yeah.
For example, how do we help and support the environment, clean up of the environment, recycling.
Yeah.
I'll give you one example. In a few weeks,
Yeah.
we'll be opening up what we're calling a pyro-diesel plant, which is a plant that is converting plastics, waste plastic, into diesel. And that diesel, the quality of the diesel, has much less environmental impact.
Yeah.
And so it's a dual thing. We are removing excess plastics from the environment.
Yeah.
Then we're also using less environmentally polluting diesel for our ground equipment.
Yeah.
So that will be launched soon.
Absolutely.
Among many, many other initiatives, which will be in our sustainability report.
Yeah, thank you so much for that. And as we come to a close of the conversation, I felt the need to just ask what your future outlook is. But before then, Jambo Jet, which you also oversee, the question is, how is it faring on? Anytime I come and I'm flying local, I see queues and I'm like, wow, we're doing well. But probably from your end as the man of the house.
Yeah, so Jambo Jet, the Jambo Jet model is it's called a low-cost model.
Yes.
And the low-cost model is about volume.
Volume.
Okay?
As much as possible.
Yeah, because so lower cost and more volume.
Yeah.
And of course, that's why you're seeing the numbers.
Yeah.
If you have low numbers, it's not sustainable.
It is not, yeah.
And, you know, I happen to have run Jambo Jet for a while.
Yeah.
In the initial stages, it was difficult for Kenyans to buy into this new model.
Yeah.
Because it's not a normal model. It's not what we call a legacy model.
Yeah.
Which is where you go and you sit and you get your meals and, you know, your bag is checked in and everything like that. So you remove all the extras that are attached to the ticket, so that you reduce your cost of operating, and therefore you can pass that benefit to the customer, and therefore increase the volume. So it's a volume game.
Yeah.
Anything extra that you want to buy, you know, you pay for it.
Okay.
So that model took time to pick up. Now Kenya understands the model very well.
Yeah.
So that's why Jambo Jet is doing well in Kenya.
Okay.
The idea is to spread that to the rest of the East African community and then further on.
Okay.
Low-cost carriers have not done well in Africa because the model is not well understood. In Europe, it is flourishing.
Yeah.
Mainly in Europe, also in Asia and in Americas.
Okay.
So Jambo Jet can be, you know, one that spreads the gospel of low-cost carriers.
Yeah.
Because indeed it can help to generate and stimulate traffic.
Absolutely. What are your current headwinds now that we are celebrating this? I'm sure there are still things that are making you awake. Yeah. What are they?
Yeah, so funding is the most important one. That's why we're looking for a strategic investor.
Yeah.
We also have, this always becomes a case, we always have our keen eye looking at what do you do with fuel. Yeah. Fortunately, the fuel volatility, the price volatility is stable at the moment, but it can change any time. Okay. We also have the Forex. Actually, the reason why we made a big loss last year in 2023 was mainly because of the drop or the Forex gain losses that we recorded. Okay. And one of the reasons why we made a good profit this year was because of the favorable Forex exchange. Okay. So that is also a risk to the volatility of foreign exchange. You're right. Like I was saying before, we deal in multiple currencies. So that becomes a dicey one. Okay. And then we are also, very keenly following the MPOX. Yeah. Because remember, this reminds us of what happened in 2020. Yeah. We hope it's contained because we cannot afford another. We don't want it.
Nobody wants it. Yeah. Yeah. Okay. Finally, your outlook and what you see next few years or so.
Yeah. Yeah. So the plan is operationally viability, bottom line profitability, but more importantly, how do we continue to contribute to economic development of Kenya and Africa? We have a plan of growth for the next at least 5 years, particularly if we get the investment. Yeah. So we have a positive outlook, barring any external factors that would impact us. Yeah. We are very bullish about it. We want to continue improving our service provision. We want to continue renewing our fleet. Our fleet is going to grow by 30% at least in the short term.
Yeah.
And then, of course, like I spoke about fleet renewal, better product. We're also very innovative, so we have a full-fledged innovation hub and looking at ways and means of what kind of new products, exciting products, particularly for the young population, can we introduce into the market? How can we differentiate ourselves from competition and be more efficient in our operations?
All right. I can't end without telling you that I saw you some days back, and industry action is a right for people, and definitely when some of your partners are facing that, it affects you as well. I don't know, what's your comment on that? I know you have dealt with a couple once in a while. We have seen you on the press speaking, especially pilots, those kind of things. How are you managing this, and how does this hit you?
Yeah, I mean, industrial, so it's about relationships. Yesterday, as you saw, the Kenya Aviation Workers Union had down their tools at the airport, so we spend a lot of time, having discussions with them because it impacts us directly. So it's around dialogue and discussions. It's ongoing, sometimes protracted, but it's ongoing. It's one of the things that as a manager, as a leader, you're expected to deal with. Once people understand the position of the company, and once you understand the position of employees and how the two can intermingle and where can you converge as opposed to diverge, you'll have a good industrial relation.
The interview is over, but I wanted to ask you, would you want to...
The interview is never over.
Would you want to, because I know you have passengers, and I know so some of them really, would you want to address them? Because we could release this and I share now. Straight to the camera, it would be nice. Yes, to your customers.
I wanted to first of all thank all our passengers, the passengers who are flying on Kenya Airways, particularly those who have already registered as Asante members. And I wanted to assure you that we're doing everything possible to make your experience memorable, pleasant, and enjoyable. We have new products that are coming up next year. We are renewing our fleet. But what we want to continuously do is to make sure that once you get into the aircraft and listen to our jingle, that you get the warmth, the African warmth and hospitality that we always provide to you. Thank you very much for trusting us with your travels, and enjoy your next flight.
There you have it, Allan Kilavuka, very optimistic, profitability in over a decade. Congratulations to them, and we look forward to even the full year results and much more. Thank you so much for your time. I leave you now with the markets.